Welcome to episode 3 of the show that does not yet have a name. Maybe the Dylan LeClaire Show for now. Someone recommended the DL. My initials, the down low. I don't mind it, but welcome. I'm embarrassed to admit how many times I've now re-recorded. This will be the third time, 3.5 even. That I've recorded some long episodes, and I've had video trouble. The resolution was garbage. And then I just recorded one like an hour ago, 40 minutes ago, for 40 minutes, and the mic was fully up, and I was way too close to the mic, and it sounded terrible. So here we are. Let's take a peek at Clark Moody's dashboard. And for the second time today, take a rundown of where we are. Bitcoin price is $66,080. Wick down below 65K today. Somewhat of a deleveraging, and near the bottom there was some news or some movement of coins from the DOJ. 30,000 Bitcoin, a couple billion. Off the all-time highs, or the 70,000 range. That we were floating at near the weekend. We will be diving into a whole bunch of stuff today. I first recorded for 44 minutes. I don't know if we'll make it that long this time, but we will talk a little bit about the halving, how I think about it, what it means, and I'll tell you more or less my thoughts on its market impact. Cover a few other things. And yeah, so 17 days away, halving expected on 420, which is funny. Looks like that we're dialing in, we're narrowing in on April 20th for the date. We're at block height 837,435. So 2,500 Bitcoin and change away from the halving at block 840,000. Let's take a look at, for those that aren't aware, we'll take a look at issuance. So here's what we're talking about here. Here's the halving effect previously in Bitcoin issuance, 14-day moving average here, because of course there is variance and ever-changing and mostly rising hash rate, Bitcoin hash rate, which translates to rising Bitcoin difficulty with a difficulty adjustment to keep this issuance relatively stable, or not stable rather, but programmatic, right? Because we are on a predetermined supply issuance on a block time frame. So every 4 years, or approximately every 4 years, every exactly 210,000 blocks, there's a halving event. This will be the fourth, to now reduce the issuance of Bitcoin from approximately 900 Bitcoin a day, new Bitcoin issuance, to 450. So here's what the same data looks like with inflation. Supply adjusted. In log terms. In linear terms, it looks like this. So, going to be under a quote unquote 1% inflation rate, an issuance rate, debasement rate, if you will. I think of the terminal supply of Bitcoin as 21 million. And so I don't really think of it like I think of inflation, but I think a lot of people do. They compare, they're going to, whether your hurdle rate's CPI, whether your hurdle rate's the S&P 500 index, whether your hurdle rate's, M2, gold, even Bitcoin. But I mean more so your hurdle rate in terms of, what do you net of, maybe you have your own inflation basket, right? But like, how is your portfolio, or never mind portfolio, your savings holding on to purchasing power and value over time, across time? And, Bitcoin, I would say, and went over this in the previous 2 episodes, hammer home the same point, obviously, on Twitter, and now a video series on YouTube, and publishing these on Twitter X. But yeah, I mean, hammering home this point that this is not like a speculative trade. It's empirically, observably, quantifiably a superior monetary system. It's a superior engineered monetary system relative to fiat currencies, every fiat currency, every political currency on the planet, and gold, because it's programmatic, right? So let's take a look at a couple things. We're going to look at, because I'm going to make a claim. My claim is the halving is more of a demand event than a supply event at this stage. I would tell you that, the inflation rate on, this is a trailing 12-month inflation rate on November 13th, 2012, going from 29%, inflation of the supply to, approximately 15% overnight or near overnight, right? Well, I guess in the next block, right? But the marginal impact of that supply, the supply reduction of the reduction of new issuance rather, as each week went on, that added, that very much added up, and at the margin made a big difference. I think going from a 1.7% issuance of new coins relative to the flow to supply to a under 1, 0.8, 0.9, 0.7% inflation as the halving kind of goes on and more coins get issued. And not as the halving goes on, as the block height, continues on, we're adding more blocks, supply is larger. I don't think it makes that much of a difference, and I'm going to go through why today. So I'm going to posit that the hodler base and the supply accumulation and supply distribution of coins is more important at this stage by far than the halving. Why? The halving is a demand event, because the demand event, how is it a demand event? Demand event is because we have the entire world that has at this point heard about Bitcoin. But if you asked the random person on the street, or never mind that, the people managing trillions of dollars of capital, explain the mechanics of the Bitcoin halving in detail, how it executes, how its supply issuance goes over time, explain the difficulty adjustment, what is proof of work mining, there's still an education gap present, and this is obvious, right? Jamie Dimon is literally the CEO of the biggest bank in the biggest, the richest country in the world, the U.S., right? And he's saying, what if Satoshi comes back with 22,000 Bitcoins? It's like, so if you don't understand how Bitcoin's 21 million hard cap is enforced, what proof of work mining is, how this social consensus is formed, how this economic network of node runners, economically incentivized node runners and miners interact with each other via economic incentives. If you don't understand how the consensus is formed, right? I analogize it to a game of chess, right? It's not the perfect analogy, but I can change the rules of chess tomorrow and say the queen now moves or the king now moves like a queen, and it can, jump over pieces like a knight, and right, I can make up rules all day and no one's going to play with me. And we've seen observably, there's been Bitcoin forks, that have tweaked one variable or tweaked this or tweaked that. Bitcoin Cash, Dogecoin, Litecoin, Bitcoin SV. Greg Red is fraud, by the way. They're all trending to zero in Bitcoin terms. So forking the UTXO set isn't this magical value creation mechanism. It's actually, every holder just laughs at you and says thanks, and they if they own their own coins, if they hold their own keys, they get a free airdrop. They sell it for real Bitcoin, right? What the market agrees is Bitcoin. So that's happened. That's tried and tested. So when I say the halving's a demand event, and stay with me while I go on my tangents. When I say the halving's a demand event, what I mean is there's this class of the world that just doesn't understand, right? Or is coming to understand that Bitcoin is provably, observably, verifiably the best money. And each halving is like hitting these people on the head and being like, wake up, dummy. No offense to anyone that's, a bit unfamiliar. Welcome. We're all here to learn. But this is happening whether anybody likes it or not, whether red team or blue team are in the political, party have the presidency or the Senate or the House or any political environment you're in, there's not a human on earth powerful enough to stop the next block from being mined or stop block 840,000 from reducing the issuance of new Bitcoins from 6.25 BTC per block to 3.125 BTC per block. 900 Bitcoin a day to approximately 450 Bitcoin a day of new issuance. No one on the planet, no human being on the planet is powerful enough to stop that from occurring. So this is very much an education, and this is going to be a long-term demand driver. Not immediately. It's not immediately priced in, or there's not a gradual, there is a gradual learning curve, but it's more of a demand event because the accumulation and distribution of new Bitcoin, or not of new Bitcoin, but just of Bitcoin in general, and these hodler waves are much more of a driver than it is at this point a supply shock, right? And I'll show you. I'll back that up. And we went over this in episode 1, but I'm just going to reemphasize, right? So here's the long-term holder supply. So from during the lead up to the blow off top in 2017, Bitcoin went from 1,000 to 20,000 in a year. At $790 per Bitcoin, December of 2016, 11 million, about 500,000 Bitcoin are held by quote unquote long-term holders. And everyone can take a peek at the quantifying, the article by Glassnode called Quantifying Long-Term and Short-Term Holders, written in the fall of 2020. And so, right, 11.5 million Bitcoin to in a year at the top, distributed to 8,600,000 Bitcoin, right? So there's a massive swing in supply demand into a raging bull market, right? And then what happens after that? An aggressive reaccumulation, right? Reaccumulation. Summer 2019, distribution, right? And so if we look at from a rate of change or a 30-day change perspective, you can see this extremely clearly. A distribution into a bull market, into a raging bull market, new money comes in. Increasingly, the people that, caught knives all bear market, got punched in the gut, hodling, the volatility, right? The volatility that's often, framed as like this scary, crazy, wild thing, which it is at first when you're figuring out what you own. But after a while, you come to understand that that's your friend, that's to your benefit. And when Bitcoin appreciates by an order of magnitude or doubles or whatever, when a Bitcoin appreciates significantly from where you purchased it, it's more than okay to take a little bit off and, sell it, right? Exchange it for something else. Bitcoin at the end of the day is just money. It's a means to an end, right? Money is not everything. It's just a tool to utilize. So the fact that people in 2010 that were mining sold some Bitcoin when it went from $1 to, $25 and, extremely fast, in a rapid fashion, that's a good thing, right? It's a good thing that they distributed, 300,000 Bitcoin almost in the span of 30 days. This is a 30-day change, by the way, right? So it's a good thing that, there was distribution at these tops because this is coins distributing to the world, right? So we're seeing, and I posted this a couple weeks ago in the Twitter thread, we're in the distribution phase. Like, that's a sign of the bull market, guys. That's not a bad thing. This is what a bull market is characterized by: accumulation, aggressive accumulation, and then some distribution. And so this is like GBTC and the unlocking of those hundreds of thousands of Bitcoin that have been changed hands out of GBTC into other vehicles. That's part of this data too, 100%. Right. So I think that this matters significantly more than the halving. And we'll just do the math, right? Like, we'll go the last year of the data. The distribution that just started to happen in December of 2023, Bitcoin right before the ETFs, 42,000. Prices ripped while coins of, long-term holders have, the long-term holder supply balance has decreased, meaning that coins have held for 6 months or more, and there's more detail, and there's a really really in-depth process that Glassnode breaks down when they explain the difference between how they proprietary determine, or not proprietary, but their own method of measurement, how they determine long-term holder and short-term holder supply. Very much intuitive as well. And the data's that you could, the subsequent data is fantastic, right? We can see a distribution happening. We can see all these old coins, these old UTXOs coming to the market, changing hands. Not every one of these is a sell, right? As same as not all of this is considered a buy. It's just coins kind of aging in. But again, this is a good way to map out what's happening. And we're seeing a massive distribution, right? So on a 30-day change basis, right? 30-day change. i.e. the 30-day change in supply held by long-term holders. 500,000 coins have come to market on March 27th, right? So not come to market. That means not all of them are going to an exchange and the market's selling, right? But what's the supply issuance over the last 30 days? Well, 900 BTC per day, 30 days, back of napkin. I mean, that's 2,700 Bitcoin. So 27,000 Bitcoin. Bad math there. So the halving is not from a supply shock standpoint. The supply shock, if you want to say it's a supply shock, the supply shock's the hodlers. It's not the miner flow at this point. It's the hodler base. And I would say increasingly as we plug into TradFi, and yes, the ETF data is very much in here, right? The ETF, the coins changing hands from the ETFs, in and out of the ETFs, in and out, mostly out of Grayscale and mostly into Bybit and to IBIT and all the other ETFs. That's in this data. And as Bitcoin's plugged into TradFi, it's going to be increasingly USD global liquidity, similar to other risk assets, similar to other markets, driving exchange rate performance. I don't think, even though this chart is really impressive, right? What is it? Dashboards, I think. Favorites. Nope, the next one. Even though this is very much impressive, favorites, price performance since halving. I posted this the other day, so the halving's coming, right? Even though this chart's very much impressive, this green lines us, a measly 730% since the last halving epoch. Even though that's extremely impressive, that's not what's driving this cycle. Driving the subsequent price action is the understanding that Bitcoin's the best money, reinforced by the fact that every 4 years there's a restriction in supply, right? So the fundamentals are the driver, and the halving is a reinforcement of the strong fundamentals, okay? It's not and as someone, I literally have mentioned this multiple times, I say this publicly, as someone that in high school, I scrolling Twitter, as an anon on Twitter with kind of lurking in the shadows, not paying attention in class when I should have been. As a math numbers guy, I stumbled upon Plan B's, right when he published it, Plan B's article, and I was just familiarizing myself with Bitcoin at this point. I didn't even understand the core concepts of what's the difficulty adjustment, how is proof of work, how is this all enforced, the supply scarcity, all this. I didn't understand the mechanics, and so when I see this log chart with this lockstep up into the right price action, what's a halving? What's this? What's that? And I don't exactly remember what I knew or didn't at that point when I was just getting into it, but as a math guy and numbers guy alone, the fact that the relative supply scarcity of commodities and their valuations made complete sense. The characteristics of money made complete sense, and this thing was going parabolic after every restriction in supply. So that very much sent me down a rabbit hole early on, and made me stack like hell in never mind the COVID money printer go burr. that made me stack harder. But leading up to the halving 2019, 2020, I was busting tables at restaurants stacking Bitcoin, and eventually wiring houses as an electrician, stacking Bitcoin because of my FOMO about the halving, and quantitative hardening in the face of money printing. So the halving this month, in 17 days, at the time of recording, it's not what's going to be drive us to six figures and above higher. The halving is a mere reality of Bitcoin's programmatic issuance and quantitative monetary policy, programmatic monetary policy that is obviously, to anybody that has studied this thing, superior to the political, centrally planned cost of capital that we live in fiat, the fiat currency regime. It is just better. It's better in every way. It's superior. It's a superior engineered system. And so the halving is just it's like a global advertisement. Last halving, May 11th, 2020, it was a small group of nerds, and I'm sure, nerds everywhere kind of celebrating, looking at their computers, attending live streams. This is obviously much more of a mainstream moment, and that's a good thing, right? Because there's still plenty of education to go. Most people understand Bitcoin, right? Most people have heard of Bitcoin, right? At this point, almost everyone on the planet that's heard about it, once or twice before. Most don't understand most anything about it. Why? The reality of it being a superior system to fiat. Exchange rate volatility aside, just from a unit by unit mechanism. There's the same units today as they're going to be 100 years from now, in absolute terms, or the terminal supply of Bitcoin is the same now as it is in 100 years from now, 21 million. What's the supply of fiat currencies 50 years from now? Can you tell me? No, you can't. Of course you can't. So this is an education event. And that's why we're all going to be celebrating the halving, because there's a whole lot of people out there that don't understand this. All right, a few more drivers here. Going for 21 minutes. I'm going to keep this a little shorter than the first one. Great post by my friend Macroscope, who I've never met, just a Twitter friend, but talking about the 13F filings for the Bitcoin spot ETFs coming out starting this week. There's going to be a 45-day lag, and I think they have 45 days to issue post Q1 close. So, any institution that wants to hide their cards, not show their hand, is going to wait to file these ultimately. But I think there's going to be a lot of big names, XYZ institutional fund, hedge fund, notable legendary macro investors, some family offices, institutions broadly that are going to be showing up here. Not with a ton of size, but previously we only had MicroStrategy and GBTC, and now we have BlackRock seal of approval institutions allocating. So that'll be, I think, really bullish. Secondly, Bitcoin for corporations. At the start of May, MicroStrategy's hosting in Las Vegas. I attended virtually, I think the first one, maybe the second one, and didn't make it to 2023. But virtually in 21, I remember thinking, wow, this is so impressive, MicroStrategy. The playbook is obviously vindicated. This, Bitcoin's gone parabolic. MicroStrategy stocks has as well. This guy is madly stacking, and he's using basically a free cost of capital to do it. Everybody's going to be lining up the door to implement. And we saw Tesla, we saw Square, or Block rather. And, ultimately, it's taken a bit longer. I mean, we just survived a brutal bear market. We washed out all the crypto fraud in 22. And ultimately, like, MicroStrategy as a champion and author of this corporate Bitcoin strategy, and literally open sourced it publicly, saying, like, look, this is what we're doing. We're announcing it beforehand. We're not selling at any price. We're going to continue to accumulate. We're going to sell equity. We're going to sell bonds. And the stock is, down from its highs of almost 2,000. It's at 14,000 and change right now at the time of recording. I don't know exactly. But the stock was $140 stock. It's literally $1,400 now, despite the pullback, right? It's like 10x higher, and the market cap's like 15x higher because, I don't know, that's a guess, back of napkin math. But because they've issued so much equity, the market caps increased more than the share price. But never mind, like the share price is literally 10x, and all they've done is use a superior unit of account. Store value. So I may or may not be attending this. I'm not sure yet, but I'm extremely excited to see, because I think there has to be. I mean, if you're a corporation, if you're a CFO, you have to at least be sending your your intern to this thing. How could you not be paying attention? Never mind going all in on Bitcoin and adding leverage to your balance sheet. If you think that's irresponsible, right? If you think that, fine, right? If you're more risk adverse, understandable. If you're not that liquid, fine, it's very much understandable. But if you are a liquid corporation, have billions of dollars in your balance, or have really any amount of dollars on your balance sheet, private company, public company, you should be paying attention and very much understand what MicroStrategy is doing. And consider, honestly, diversifying some of your cash holdings. Maybe not all of it, right? I'm not saying 110% of your liquid capital or your net worth needs to be in Bitcoin, but you shouldn't have none in Bitcoin. So I'm very much interested to see, and not that anyone, who knows, maybe some corporations come out and say they're doing this at the conference, but I think despite the message saying the same, like, I kind of laugh and face it. So, similar to myself, like, Saylor's been repeating this same core thesis and playbook. They've literally open sourced the playbook since 2021, 2020. I mean, 2020 ultimately, but 2021 really, like, even laying out the entire playbook for corporations, like open sourcing it. He's been repeating that same message for years now. And I would say, even despite the pullback in the shares or Bitcoin, it could get cut in half, and the playbook would have still be vindicated at this point. Right, this MicroStrategy could get cut in half from here, and the stock would still be like a 4x or 3x from where they started the Bitcoin strategy. Right, so, like, it's still one of the best performing companies on the planet since then. So, like, how could you not pay attention? Never mind their equity price. At near the top, the convertible note that was issued either at the start of 2021 or the end of the year in 2020, the convertible note that, as I think it was zero interest rate. Or near zero interest rate that MicroStrategy issued in either 2020, late 2020, early 2021 was like, if not the best performing bond, because maybe there was some near bankrupt credit instrument or bond that recovered to its par value at some point. But MicroStrategy's convertible notes were trading at 420% higher than their par value. 3 and change years later, and that it could be 200% now, or 300%, or I don't have a Bloomberg terminal. If someone's interested in sponsoring me for a Bloomberg terminal, let me know. No, but seriously, on a serious note, that was, never mind the equity. If you're a bondholder, right, your bondholders' interest is not like equity holders want to make money, bondholders, creditors want to not lose money, and then interest on top of that. On the return of their principal, interest on top of that's gravy. What you don't want to do as a bond investor or creditor is see a default, not get your money back. Interest on that's gravy. So the fact that they have a convertible note that's up, multiples of the par value is, like, insane. So if at this point, with the FASB accounting rules coming to change at the end of this year, there has to be. I would be surprised. I've been wrong plenty of times before, but there has to be renewed interest or an increased level of interest in this. Because if you're not, well, I guess it's just negligence, right? Like, if you're paying no attention to this and you don't understand this at all, and never mind MicroStrategy or Saylor, Bitcoin, right? This is bigger the idea than all of us. Bitcoin is bigger than me, you. It's bigger than Saylor or MicroStrategy or Larry Fink. If you're not paying attention to this at all, if you have no Bitcoin, right? Like, CFOs are risk adverse. Most aren't gonna put their entire treasury in Bitcoin. But having none in Bitcoin and you're liquid, you're negligent. So that's, I think, another catalyst. Aside from the 13F filings that I think will be interesting.